TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 85. You get the Nasdaq off 27. S&Ps are off 7. Gold contracts flat at 1,081. We have silver also flat at $14.16 an ounce. Platinum is down $12 at $8.64 an ounce. Copper off another penny and a half at $2.15 a pound. Light sweet crude, that's taking it on the chin. That's down 83 cents. It's at the lower end of its range. It's looking to go break that $40 level right now. We're trading at $40.92 a barrel. Bonds. The 10-year is up 9 ticks, 126.15. The 30-year is up 14 ticks, 153.11. Now, what we've had in the bond market is this. You went down for approximately 3 weeks. Volume, as it came into the swing point, lightened up. We rejected lower price yesterday. You're following through today, and you have volume going topside. We'll see just how much volume we get in this. But thus far, what that bond market is saying once again is that bonds want higher price, lower yield. And it makes sense with the market pulling back. What's going to be really wild is watching how the Fed responds to that coming this December. Thus far, the game is still on that rates wouldn't go up with this bond market as it's charging forward once again. Dollar index. Dollar index is up 523 ticks at 99.23. Now, the dollar had come down hard yesterday. You're doing a bounce. You're going back topside. Now, the volume is not inside the dollar this morning, so we may just double top out at the 99.80 area. Right now, you're at 99.23. Euro is down 93, trading at 107, and the yen is trading at 122.82. If we come over to the S&Ps and take a look at the S&Ps first, what you're looking at is this, folks, is that on the daily, on the weekly, what the SPY has done is that it gave it up on price, had an expansion of volume as it moved to lower price. It was breaking a swing point yesterday, and it didn't break that swing with volume. We did have an expansion of volume, however. So the SPY right now is trading out at a price point of 204.13. And what I expect you're going to see it here is another expansion of volume. We got quite a bit of volume right now. It's already done 17 million in the first half hour. Bottom line is that you buy the gap when we had gapped higher. And what this is setting up right now is that this is setting up a run down into the 186 area. Right now, the SPY is at 204.08. If we take a look at the NDX 100, that has a further way to go. NDX 100 is still showing some strength out there. It is into the gap. The 3 Qs right now, when we had gapped higher, the gap, when we had gapped higher on the 23rd, bottom line, that level up there was 113.24. It took that layer apart. The bottom of this gap is 109.80. Right now, you're trading at 111.20. What has also happened inside the NDX 100 is that you got a big expansion of volume out here today. This is going to be a highly volatile day, folks. I expect you're going to get lower prices right across all the indices. If we go over and take a look at the gold market, bottom line, gold market rejected lower price yesterday, had lighter volume, went topside, and for a Friday inside the metal market, it's responding pretty good. Bottom line, it's holding price. The markets themselves where the big problem lies out here today. If we take a look at the bond market, and the bond market is going to be the market that releases the most amount of information out here. And thus far, what you have is that this bond market is moving higher today with real volume. We've already done over 500,000 contracts inside the 10-year. The 10-year is trading at 126.16. Once it got back inside the 126.16 area, right where we are, is saying, hey, you're going topside once again. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, you can give them a call at 855-750-4051 or visit everbank.com/TFNN. Have a great day, safe day. Look forward to speaking to you right back here Monday morning, 10 o'clock. If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.